Initiating Uber this morning with a buy and a $75 price target. The stock also among their top reopening plays. Brent Thill is a senior tech analyst at Jefferies and joins us now. Brent, explain this to me. Uber has made this massive pivot over the pandemic to food delivery. Food delivery is not expected to show the kinds of numbers that we've seen over the last year. Ride sharing, yes, but it's transitioned away from that. So why is Uber more compelling than, say, Lyft that focuses solely on mobility?
Yeah, I think Uber is a platform. It's a global play. Lyft is largely one trick in the US and in Canada. And what we like about Uber is the diversity. We like both stories. The US is opening quicker given the pandemic as clearing. International markets are still a little bit of a hangover in some of those markets in Europe. So that will drag on Uber. But ultimately, we think that both will benefit. Lyft in the US opening and then Uber as it relates to the global opening. So our perspective long term is that given the platform capabilities of Uber around freight, mobility, food, long-term call options on air, and autonomous in their investments, that we think that they have more engines for growth and have more economies of scale. And as they say in technology, platforms win and point solutions die. We think that they're in a great position to weather this coming out of this pandemic.
Brent, it's a great note. You say that delivery was a great hedge as rides were plummeting during the pandemic, but you still say delivery will double by fiscal 22. Why should it not be an offset if rides come back?
Well, I think it's going to be an offset. I think the way that we're running our lives now isn't going to change. The work from anywhere trend is going to continue. Again, I think the usage in my family is 4x in terms of food delivery. And ultimately, I think we are going to go back to rides. I took the first Uber ride in a year, just last week. So I think ultimately, as we believe there's kind of three avenues that you can play. Travel's going to open, dating's going to open, and that's going to lead to more rides. So we like, in the travel space, what's happening as it relates to Airbnb and booking in travel, on dating, Match and Bumble. And as those things continue to blossom, you're going to need rides. So Lyft and Uber will be in that position, and we think rides are going to come back. Food's going to still be there, and there's a lot of great call options. That's not going to go away. It's just the rideshare piece will start to begin to inflect.
Brent, Uber is finally there trading where a lot of people thought it would be 2 years ago at the IPO. But as you point out in the note, it has shed autonomous, it's shed scooters and bikes, it's shed flying taxis, a lot of these big ideas that people were talking about for future growth. So given the competition it has from the likes of DoorDash when it comes to food delivery, why does it deserve to be a $100 billion plus market cap?
Well, right now the stock's under 5 times forward revenue. We think you can get to 6.5 times. These aren't big multiples. And their call options in all these other businesses, they didn't necessarily totally get out. They have call options in the investments through partnerships in these initiatives. So I think they did the right thing. They've been experimenting. They've effectively come back to what the core of the business is. How do we get to profitability by Q4? And then they have these call options that are set in these investments in autonomous, in aviation, in other sectors that if they come to fruition, that they can participate. So ultimately, again, in the US, DoorDash is no doubt a major competitor. Their market share is almost 2x that of Uber. But you go global, Uber is the dominant global leader. And we, again, believe that their network effect, there's a lot of power as it relates to the other products they can bring into the mix as autonomous comes on, as we get the George Jetson flying taxi at some point will happen. But they have that call option in. I think the good news is this company's tried to innovate. That's the good news.
Shepard Smith here. Thanks for watching CNBC on YouTube.